Hello and welcome to your special presentation on industry movers and shakers. My name is Steve Chappell, the Director of Trading Systems Development here at VectorVest, and I am delighted to be your coach for this presentation. Listen, the time-tested VectorVest approach to the stock market has always been to buy safe, undervalued stocks rising in price in a rising market. So we can add to that a bit, amplify that particular methodology by incorporating hot industries and sectors into our stock picking routines to place an emphasis on what is rising the fastest or falling the fastest and really take advantage of those situations. So this is a subject that is near and dear to my heart, as I've taught this at literally hundreds of events, I believe, at this stage over the past 20 plus years. We're going to cover some very basic knowledge up front. There's a lot more that I can share on this subject, but I'm going to give you the nuts and bolts and really the key information you need to know in this one to get the job done. Okay. There's no holy grail out there, right? But this is a technique that has literally stood the test of time. I've seen it work year after year after year. And if it's something that you consistently apply, turn after turn after turn in the stock market, it's going to do you an awful lot of good. So let's take a look. So the first thing we need to understand is how the market can be broken down. So we title this segmenting the market. And we'll hopefully all realize there's one entity, one market, one stock market, right? And so that's a representation of all 9,141 stocks represented by one unit, one specific unit. At VectorVest, we call that the VectorVest composite, right? The VVC. Now, the next largest grouping of stocks, but smallest in number of denominations in terms of entities, is the business sector, right? So there's only 41. So there's going to be an awful lot of stocks in a particular sector when compared to an industry, as you'll see in a moment. A business sector would be like petroleum, energy, mining, right? Let's take petroleum as a sector. Within that sector, there's going to be multiple industries. Because if we know a little bit about the petroleum space, you've got the machinists, right? You've got the pipelines, you've got the refining, you've got the drilling, you've got Canadian equities. There's many different ways to break those companies down and get more to a peer-to-peer level where you're really comparing two companies that roundabout do exactly the same thing at that point. Whereas if you're just looking at an entire sector, you've got, you might end up comparing a driller to a machinist, and that can, enter question marks, put some question marks into the equation. The other thing I would say here is the industry level, I can make a case for that quite simply. One of the fondest memories I have of the stock market until recently, last several years have been dynamic. But prior to that, when the chemical fertilizers first took off, back when Mosaic and Potash and Trepid, they were all in the chemical fertilizer industry. So chemical is the sector, chemical fertilizer is the industry, and that was an incredible, in fact, the hottest industry in the stock market, and a rather poor in relation overall sector performance with chemical, right? So there's often some really hot industries within some subpar or not as dynamic sector groups. And so I like the industry group level for all those reasons and more really. Dr. DeLito has shared essay after essay in VectorVest Views about this subject, and I see the most commentary built up about industry groups on his front as well. So I see comfort in that we've both come to a lot of the same conclusions, I believe. And largely, I learned everything from him to begin with, right? So here we are. But that's how we do it, So there's the overall market, which can be broken up into sectors. There's still large quantities of stocks, and in certain cases, somewhat unrelated, like, a gold to a silver company, although there still is a relationship there, right? They both do tend to move the same direction typically, but one can move faster than the other, all that kind of stuff. But the industry level is really where I think the sweet spot is for these reasons. So let's jump in a little bit deeper into the knowledge bank here and get this subject across. So birds of a feather tend to flock together, right? And I know you heard that as many times as I did probably as a kid, but let's relate it to the stock market, shall we? So the idea here is when these chemical fertilizers say take off, even some of the weaker stocks in that industry are going to take off with them, because a lot of folks then are going to say, well, I love Potash and Intrepid. They've already really run. Here's some stocks down here that may have a little bit more perceived value to them. Yeah, often leads to bad decisions, that kind of thing. But what happens is that the whole industry tends to get on the move, even some of the weaker stocks that are there. So that's why this principle is so important. And we track them same way we would track stocks. So we put an average relative value, average RS, average RT on all these groups. And that becomes extraordinarily important, particularly here, where when we want to decipher what's hot and what's not, we want to use our key indicator for that, which is relative timing. Relative timing is king when analyzing industry groups and sectors. Sometimes we can add some things. You'll find essays from Dr. Delito where he'll add a CI, in adjacent in conjunction with the RT. But RT is the place you start, because that's a magnificent timing indicator looking at a lot of really critical information on not just direction, but also magnitude and dynamics. And, there's a lot built into it. We know from all of his essays, right? So this is huge. And we want to pay close attention to RT when we're doing our analysis. And ultimately, where I'm going to lead us, hopefully fairly quickly, and maybe a little quicker than I'd like to get in some respects, but into the delta searching application, because a lot of times there's some stuff going on under the surface that is really important, and delta is the way to uncover that and find the ones that may not be at the top of the list yet, but might be working their way there pretty quickly. And so that's really key. So delta search is ideally suited for what we're going to be talking largely about today, which are the movers and shakers, and getting even better performance as a result. Okay. All right. So let's get to it. What I'm going to do is move us over into VectorVest at this point. All right. And here we are at the home page. What we'll do is just come right up here to the top and go to the Viewers tab. Okay. From here on the Viewers tab, what we'll do next is go over to the left. I'm sure many of you have already trafficked heavily the watch list viewer and the stock viewer looking for candidates. I would say the two lesser trafficked are probably sector and industry. Maybe you've clicked on it with some interest, but we're going to show you around a little bit and show you that it's worth adding into your rotation. Okay. So what I'm going to do is start with the sector viewer, and we're going to start by looking for hot industries. So you got to use a bit of imagination here, because the first thing that is the priority is what? Market direction, always. That's paramount. Most important, single most important thing affecting anything you ever do in the stock market is market direction. So markets are not going up right now. What I'm going to be doing is just showing you the efficacy of what we do, right? Realizing that there will be a time where you do want to favor these top sectors, where what you really want to be favoring right now are the ones at the bottom of the list, and we'll discuss why. So at the top, we've got building. And a beautiful illustration of why this sector is at the top is as we continue to drill down. So if you double click the top one here, which by the way is at the top because it has the highest RT value, which is going lower throughout the day, by the way. It was 1 just earlier, and now 0.99. So even these most, I would say, not hot, but resilient sectors of the stock market are also succumbing to the pressure. Okay. But if we double click here, see how much you learn just by taking looks at the program? Right. Now, if we come into Industry Viewer, I don't see any green here, so none of these are going up. The ones that have been the most resilient are building residential. We know that because RT, again, is the highest. Okay. Now, this is important because as we get to looking for the weakest of the weak, you got to remember the sort, that you're looking at. So always want to eyeball that. For the hottest of the hot, we want the high RTs. For the coldest of the cold, we want the low RTs, right? So I'm going to double click here. When I do, that brings us to the list of stocks. And this is informative for a big reason. One is, how many sell recommendations do you see in this particular industry, which is the hottest industry and the hottest sector in the market? Okay. There are zero sells. How many buys? Lots of buys, more buys than even holds still. But everything's falling, right? So it doesn't mean run out and buy them. That's not what we're saying here. What we're saying here is this is the top space in VectorVest right now, at least by the way we drilled down here currently. And this is why it's worked its way to the top of the list. It's got the most healthy buy to sell ratio. We talk about the buy to sell ratio on the stock market, right? What's this buy to sell ratio look like compared to the overall stock market right now, where the buy to sell ratio is well below 0.2 again? That's not the case here. You got to do one of those sideways eights. Remember that infinity symbol? There are no cells. There's no denominator. Okay. Now there might be over the next week or two. We'll see. But it just goes to show how resilient that group is. Now, if we flip this on its head, this is where you got to remember what you're doing if you're going to be doing a lot of work in here. So RT ascending, right? Energy is the worst performing sector in the stock market right now. Makes some sense. We're watching crude prices come in. We're watching a lot of things come in. Clean energy, very few stocks really have any value to begin with at this point, right? So drug, we can think about macro reasons why drug would be under a lot of pressure right now. So a lot of it's going to make sense, but this is fact, right? We could see it at the top of these lists. So if I double click on energy, then I can look for the weak point in the entire space, which I think there's only two. Yeah. So you got coal and clean. And coal, just comparatively, look at the RV on coal compared to clean, right? So you don't want to go shorting coal when you got lower hanging fruit with clean. All right. And so and look, boy, one of them is about mid-pack at 112 on the industry list, and one of them is near the bottom already at 215 out of 222, right? So you can see the RT ranking in here as well. So another indication, if I want to go with what's hot, in this case to the downside, energy clean is hot in that regard. It's going down and going down fast. Okay. So if we double click that one, or sort RT ascending, double click the top one, that brings us here, right? And there are two buys. So compare and contrast this situation, the buy to sell here, and it looks an awful lot more like the stock market, right? Where resoundingly you have a tremendous amount of sells, only a couple of buys, and it's really the stocks, well, with maybe the exception of Sedge, and you can make a smaller argument for some of the other ones. But when we look at the VectorVest numbers, right, you don't want to go out and short First Solar or DQ, because they're the most resilient. They've got the better numbers. So what you do is you flip it to VST, right? You could also consider RT, whatever the case might be for you. But this would ensure that both the RV and the RS are likely pretty pitiful as well, And so generally a better way to go overall. So this would be some of your better opportunities right now. Now, you want to start looking at prices and things, so sometimes you got to go a little ways down the list, to uncover some things that could be interesting to you. Now, what I want to do is, since it's relevant to the current time, I want to start taking this reference point back so we can see, can this have an impact on the bottom line? And so what I'm going to do is just go to the most recent down call, right? We're in a down right now, and presumably are fairly well stuck there at the moment. We'll see as more and more data comes in, but more banking troubles again announced this morning. My goodness, right? So anyway, when we got the confirmed down, was there opportunity here on the short side with some relatively low-hanging fruit? And that is market down. I come in here, I go to RT ascending, right? Lowest RT sectors. So I start pinpointing the sectors that are already under pressure, which, by the way, are the same ones that are still the most under pressure today. So you might imagine that that's going to mean a lot of this testing is going to go quite well, right? That's usually the case. Now, if we double click here into energy and again go clean, because at that time, still the worst of the two, and most importantly by RT, right? So on the industry and sector level, important to stay focused on the lower RTs until we get a little bit more exotic with Delta here in a bit. And you get a little bit better insight into why you might want to grab some of the other ones on occasion, okay? So double click here. And that's going to lead us to a whole bunch of stocks. Now, the top VSTs are going to be at the top of the list here again, just like we discussed earlier. So we want to flip that over and look for things that we'd be comfortable with. Maybe even optionable stocks that have, it's going to be hard pressed to find some good ones here that are of a high enough price point, I think. But let's see. Here's Sun Power. It's 15, right? 16. And as we look across, just awful, pitiful numbers. Look at RV and RS and everything. So we've got some candidates that are legitimate, right? I could show you some astounding results from the top of the list too, but we'll take a more realistic approach to things. And 20% and 23% respectively. So just imagine with the options or something where that could really be. Although if you're going to use options, a lot of the time you're just going to use that as a way to mitigate against some risk of going as heavily monetarily into the shorts, right? So any way you want to slice or dice that, plenty of opportunity here. If we go to the next one, right? We just do the same thing. We go to drug. We dial in, we look for the lowest here. We got drug wholesale distribution. We double click that, right? And then we look for the worst VSTs, hopefully sell recommended. Holds are okay. Definitely don't want to short buys, okay? Typically. In some cases you do. That's really for not the faint of heart though. So the main thing is favor the ones that have some of the weaker numbers across the lists here, and you're often going to end up in a good place. Okay, so we'll just quick test selected. Oh, look at that, 38 and 33. So it's really at some stage almost like shooting fish in a barrel. I will say you're also going to have a lot more success in a bear market scenario, right? Going short and doing this methodology, and you're going to have a far better experience when macroeconomic climates are more bullish, right? Like back in 2009 all the way up to 2022, going long, with this kind of methodology. That's just, the way markets work. But it does bear fruit, even on the interim bumps and wiggles, some of the ups in the more prolific downs and some of the downs in the more prolific ups. But the real money is always going to be made. We teach this at all 2 days that we teach at this stage. When you're in a situation where you're having longer, more protracted downturns and shorter, quicker upturns, most of the money you're going to make is on the short side of the market under those conditions. So not surprising to see all that, and I wanted to kind of knock that off the table here quick. Having said that, you're going to still see some pretty dynamic result to the upside here recently. So the other thing you can do is just go straight to industry viewer, and this is often something that I would do as well. And the key again, make sure you sort ascending. In some cases, you'll find some of the same things you were just looking at. In other cases, a healthcare marijuana can work its way in there. So we can double click here, and you're going to be hard pressed to find stocks north of $5 in this space anymore. There are few, obviously. So we can go down the list of good ways and try to uncover some of that. About the best one I can find here, well, it's a pink sheet, So I think IIPR is in here, which honestly is one of the better choices in the space, but at least it's something that's doable. So I don't love the idea of shorting a 130 to RV. Having said that, it's got a sell recommendation. It's in an industry that's getting snockered, right? So if we quick test it, yeah, it's off 12%. See what I mean? So I would prefer not to do that though. In many cases, you might just want to go to the next one and rinse and repeat. Go to your low VST, favor your 3-time losers, and look for some good opportunities. And you'll find them, okay? 16% there on Faro. Low RV, low RS, low RT. Not quite a sell yet. I'm okay with that. The numbers are just pitiful here. Okay. All right. So good. Let me get out of here and let's have a bit of fun. Gee whiz, I'm already running longer than I expected at this stage. So there's a lot of value in what we just showed there. You can flip this methodology on its head in the ups. Again, it's going to be a lot more prolific in years past than it would be here recently. But if I come over here to Unisearch, I got to pick it up a notch. You can do some simple searching, right? And so to show the upside, I think I'll just stick here. And what we'll do, I know some of you don't want to just hear about shorting all day long, even though now is not the time to be hearing about buying just yet. So you should be hearing that. Let's go to January 9th. We'll come over here to the right. So January 9th was a confirmed up call. So in your Unisearch tool, okay, there's a collection of folders here for Delta. And the one I usually travel the most is Delta Searches Industries. I'll occasionally look at the sectors just to take a peek at it, and I try. It's hard to keep it consistent, but I try to run this once a week, usually on a Friday, if I can remember to do it. And I tried to develop that habit from Dr. DeLito himself. You can see how several of his past essays materialize because this was a habit. And so I'm trying to, best I can, to work at getting that habit ingrained in me. And I often forget, unfortunately. But when a signal occurs, I'm almost always in here, just at least giving it a look. Here on 1.9, if we run, say, 10-day price delta, I like the 10-day here in relation to the confirmed call because of the nature of the call, right? You need at least higher week-over-week price action for a confirmed up call to occur, right? There's also buy-sell rate, but I think the 10 days being a component here, right? So it's not completely arbitrary. The other answer is it's something that does tend to work a lot more often than it doesn't. Although I do find some value in the 5 days as well. But when we come in, look at this. Look. Now, this is a little different, and we can discuss quickly why. So what we're doing now, Delta Search measures magnitude, okay? It measures, it's like a quick test. It measures percent change and thereby the magnitude of that change. So the top space right here on this date is by far the top space on financial crypto because the magnitude is by far the greatest. The stocks in this particular industry, right? This is an industry search, are up as a unit 32%. You say the party's over, right? Well, not so fast, my friend. It's still only 221 by way of industry rank. So there was a lot of blood in the streets here, okay? And so what we're seeing may be developing is a new rotation back into crypto, which has been just awful. I don't want to get into all the reasons why and any of that stuff. Just the facts here, what's happening, right? So what I can do is just double click in here, but that RT ranking is an important field. So this one's coming up off the bottom. This one's about middle of the pack with leisure, toys, and games. And so I generally like to be either on one extreme or the other, not somewhere in the middle typically, but the magnitude is the magnitude. And so just sticking to the top of this list is really odds on where you want to be. Okay. So I'm going to double click here at the top couple, right? Riot and this little booger there, that might be a little unfair. But let's quick test the top couple here. Riot's always the kind of the trader's choice in this group. And you see further evidence of it here. So we're not really going to place too much emphasis on buying a 14-cent stock. I mean, I doubt it even has the volume. So Riot, obviously the clear choice. There are other choices in this space. And again, I would pay at least a little bit of attention to indicators like RV and RS when trying to separate the wheat from the chaff here. So we'll at least take some high RV, right? Oops. Selected Chappell. So there's another two, 49 and 25% further they have climbed so far. And that's to date. If we knock this back to just the confirmed down, most of the gains were up until that point. So 44 on Hive, 51 on Social Dig. Social Dig's a little low in price here again. So there are choices here. It looks like Hive and Riot. And by way of everything we've talked about, you're trying to find 3-time winners. If you can't, you typically at least want RV. when you can find it, and then you want a reasonable price. It doesn't get a whole lot better in this space at that time. So, and let's get on into the next one. Right, and so top stocks in here at this time were, got at least a 136 there, a 132 there, right? All right, so 1 for 2, but so far what, 3 for 4? All right, not in the loser nominal. So far so good, right? And Ella, let's look at that quick test. Ella had the better numbers, and that's often the case. Not always, sometimes again, people go after that perceived value of the laggards sometimes, and they go up more than the more well-established companies. But Ella was always the better choice of the two, because if we go back to the numbers, Ella had stronger numbers there, right? All right, let's go back out of here, and let's go to Leisure Toys and Games. All right. I know Nintendo doesn't do quite as well, and this is another point of consideration, and that's sticking to the buys. I'm going to leave that ball in your court. You can't have it both ways, right? So we'll take the good with the bad here. No harm, no foul. One up, one down, about the same numbers. Building, mobile manufacturing, RV, right? 153. That's pretty good. Numbers there. Hard to find anything else really worth getting too excited about. But we'll take a couple of these and see how they go. There you go. One doesn't look like it traded for whatever reason, but so 2 for 2 really, because one you couldn't have got into. And that was the one further down the list. So stay towards the top of the list, favor the higher fundamentals. That's the crux of that. And then of course you can flip this over on its head. So just take the 10-day price delta search, right? Flip it to ascending and then bring it forward. So I guess I'm giving you a reason not to go to sector and industry viewer again. I think it's worth doing both, okay? I really do. And when you get in here, it's a lot the same. So on the short side, again, you got to guard against the prices here a little bit. Oops, here's the price column here. About the best thing that we can find are maybe these two. The reality is, there's really nothing to short there. They're all pink sheets. So we'll go to retail department stores. And hope here we'll have a little bit of flow. Yep. Let's pay close attention to maybe the top two here. I'd prefer you didn't have that RV score, but it is only 1.06 after all. 19 and 26 respectively, so that's another indication, right? So KSS did better than M, right? KSS has worse numbers. Again, that's not always going to be the case, but if you did empirically, if you did thousands of tests, it's going to be the case, So there's everybody always likes to throw a one-off at me somewhere, like, well, hey, look at this stock went up. Listen, we're talking about putting the odds and probabilities of success in your favor, right? More winning trades, things like that really matter. That really move the ball. If you're going to be trying to look for edge cases to buy or sell all the time, well, rot's a ruck, Raggy. That's what Scooby-Doo would say. All right, let's get out of here. So hopefully I've impressed upon you the importance of at least perusing the top industries and sectors, looking for 3-time winners or losers, and doing so with a rising market, good quality stock in rising industries, or falling market, falling industries, poor quality, falling stocks. And by doing that, you put a lot more odds in your back pocket. Thanks for tuning in, everybody, and we'll see you soon. See you soon, guys. Good luck.